The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. And another interesting day in the markets. We had been looking for a bounce in this market and pretty much got one, giving about half of it back so far, trading out at 1856.92, 1.8 billion shares. So bounce on light volume. My guess is that this bounce is not over. We're probably going to be seeing this into next week. This is the first day of fund buying, and they'll slowly mark the prices up. I figure that fund buying will come in on earnest in the mid part of Monday afternoon, and we'll just see just what the bulls have out there for us. But I think we're probably going to go sideways to slightly up. Maybe even into Wednesday, so we'll have to see how that goes. But pretty weak bounce so far, trading out at 1856 on the S&P cash. Again, 1.8 billion shares, so on the consolidated New York Stock Exchange tape. So pretty weak so far. Wimpy, wimpy, wimpy. So we'll be looking at that and other things as we go through the show. You can always give me a call at 877-927-6648, 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den, as always, and we'll be talking about a variety of things today. Of course, today in history, a minor malfunction occurs in the cooling mechanism at a power plant in Pennsylvania. One technical error follows another until the malfunction is escalated into almost a meltdown. It didn't melt down, by the way. The name of the power plant is 3 Mile Island, and it becomes the graveyard of American nuclear power industry, once held out the promise of cheap, safe, and clean energy for all. And, there were a lot of errors going into it, but seems like anything significantly dangerous, as long as it doesn't fail instantly, everybody gets used to it and then just takes it for granted. Of course, today, much better designs where this could not happen. A lot of times, a lot of the problems stem from them using water to create steam and drive generators. Today, the best of the new generators, our new power stations, use molten sodium that can get about 20 times hotter than water before it boils, and takes away a lot of the problems with these plants potentially melting down. They also use what is called a Pebble Reactor. Instead of a huge rods of uranium, they kind of spread them out like gravel in a big, about 50, 60-foot round area. And there's a variety of ways that they can slow down the reaction to keep the temperatures low. But those Pebble reactors, as they're called, also some other designs, probably 100-fold safer than the reactors that they have. And the basic design that probably not everything, at least in the United States, comes from both the chemistry and technology from making nuclear bombs, probably why they're so dangerous. But we certainly could do much better today. Of course, just about every week now I'm seeing more and more articles about how nuclear fusion, the promise of a non-radioactive and abundant fuel at the price below coal, looks more likely every day. In fact, I was just writing about that in the Tech Insider today. But we shall continue to see out here. So we're up 5 points now in the S&P cash. not unconcerted that we're seeing at least some pullback in this market on the light volume. I suspect we're probably going to see more people short, and maybe 1-2 more gaps up, and maybe this will be it for the top in the markets. What is the electric cost of coal-fired plants? Coal fire, you should be able to get, I think it's between 5 and 7 cents per kilowatt hour. And that's about the same for nuclear power. And nuclear fusion should be just about that same rate, but without all the waste product of nuclear fission, or fission. Fusion should give us a cheap, abundant power for thousands of years. And of course, we do need a tritium for that, which means that we're going to have at least some nuclear facilities still running around to make the tritium. But it'll probably be done without a lot of problems. But, you know, we look at natural gas, which I think is 10 or 12 cents, as high as 15 cents a kilowatt hour in some areas. So 2-3 times what coal costs or nuclear costs. And then, you know, we get even more expensive. I think it's about 35 cents a kilowatt hour to use diesel generators. So nuke cost doesn't take into the cost of vast storage. Well, I don't know what vast is. We've already got a facility to take care of it all. We've already built it, and we've already paid for it. So the question is whether or not we want to use it. And it's a NIMBY, not in my backyard for that. They found the safest place in the world, the salt mines down there in Nevada. But, of course, no one wants it anywhere close to them. And made up some stuff on the safety of the facility out there. But, no, we've got a wonderful place to keep it. But the NIMBYs will keep us at least on the dole for more expensive energy for years to come. That and the Luddites. But of course, once you give something to the and the power to politicians, they can always find a way to screw stuff up. But there are designs now that would make it safe, clean, and affordable, even for the storage. If you talk about a facility getting 50 to 60 years worth of use, and then the decommissioning, I think you can add about a penny a kilowatt hour would pay for the rest. The problem tends to be that politicians want to keep the price down that extra penny over all those years, and then say, hey, no one ever put that penny away for taking care of that nuclear facility. And, of course, if you just put a penny away for 60 years, you're going to have a ton of money when you're done. But none of those companies did it because everybody wanted a little less expensive energy for their constituents, and pretty much gave us what we want. So I'm going to lay that problem on politicians for the most part. Fukushima will never make up for the savings. Probably not. But again, probably shouldn't build a bunch of nuclear power stations built on bomb technology. I think you're probably pretty much, yeah. There's several ways to take care of it and work out the energy. But, yeah, you don't want one of those things going south on you. And, of course, fusion is what we were really looking for. But as we look at the market out here, just seeing whether or not we get any real movement, 5 points, 1.86 billion. Going to be interesting to see if we get this super light volume rollover today. But what we were up, 15 points at what point? Yeah, 1866. So we were up about 15 points on the day on the S&P cash at one time. Anyway, I think we're probably going to get one more bounce, maybe two gaps up, and then we'll be able to set the hook once again on the short side, probably maybe Tuesday, Wednesday, Thursday of next week. And interesting. Okay. You can give me a call at 877-927-6648. We'll be glad to talk about your charts. A lot of charts out here that are interesting me anyway. I had a lot of Gartley patterns last night. Everybody gets those. None of them looking a great deal good. There was one or two in there. Probably stuff that interested me more were a lot of either tests at the top or tests on the bottom we have out there. So we'll take a look at a few of them. Was expecting a bounce in some stocks. Some actually have proven that they're going to be problematic. This Yoku, Y-O-K-U is the symbol on this thing, is one of the more interesting ones to me out here. A lot of stocks did come down on lighter volume, did have either the same or slightly less volume, which indicates maybe we get a bounce. Some stocks actually did break the lows on higher volume, and this is one of these in that sector that has blown out the lows. Probably going to bounce with the market a little bit, but I would love to get a bounce out of here to start pulling the trigger on some of these. In this case, this was going into the February 5th low at 27.05. That had 3.4 million shares, and of course yesterday 6.7 million shares. The energy down in comparable legs, picked up by about 15-20%, and more and more stocks out there showing that kind of I read a story. Amazon going to introduce a streaming service this weekend. Could be free. I suspect that that's going to be next week. They've got a presentation for their quote developers, and I think that's either Tuesday or Wednesday. The idea is that they're going to have something kind of like the Chrome dongle that Google has, and the idea is going to be that you get it free and the streaming service free with Amazon Prime, and I think that's why they jacked up the price about $20 to cover that for all new subscribers, but or I guess people resubscribing on their Prime service. But we'll find out more about that next week. I think probably not going to make a lot of money for Amazon, but more than anything else, probably an issue with Netflix and what they're going to do. Another one of these China companies, Yingli Green Energy, actually slightly bullish, not heavily bullish, but this thing's come from 715 on March 7th back down to the lows yesterday at 412. It came in and the volume shrank by 50% approximately. You had 417 on December 9th, so you went below at a nickel and the volume shrank in half. Anyway, we're going to be back in just a minute, but there are a few stocks out there that are interesting. We'll talk about more of them when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with TAZ Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to TAZ Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Technomental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Technomental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, just checking in with the markets out here real quick and seeing we have much. Looks like we're up 5 points. The question is whether or not they can roll this thing back over before the end of the day. But I think we've got a few more days of moving a little higher. Again, you can give me a call at 877-927-6648. That's 877-927-6648. We'll have to see. Oh, what else do we have going on out here? Oh, I wanted to talk about a few things before we get into any more stocks. Did have some email in here. SGG, can you give me thoughts of SGG, Total Sugar Return Index? And, looks good. By all accounts, you've got some decent energy already on the way back up, nice gaps. I don't like the gaps, but you're probably going to get one more on this thing, and looks to me like it wants to come back to 61.48 on SGG. And that's pretty. And let's see. George from Tennessee says he wants to short Google. And I tell you what, there's a few companies that I don't think I want to short, although you may make some money. Google is one of them. This thing is one of these stocks that has pretty much made it back to its signs of strength. In this case, high volume, wide price strings back around the 3rd of February. It's coming back into this gap up that had, 5 million shares. And you had 3.8 yesterday, and you have 1.5 million shares today. So, maybe does this thing jump back over the creek? It could, but one of the things with Google is they have such a clear model for how they make money. And that model's not going to change very much depending on what the economy does. It could change a little, but this thing's about 10% off of its size. I think that's probably all you can guess from it. There are a lot of weaker animals to go out there and get than probably Google or Amazon these days. Amazon actually may be a little closer to setting up and breaking down. Google, not so much. This looks to me like it's come back here and hit this gap. So, maybe does it do one more leg up and then the volume really come out? It could. Right now, I don't like it for a variety of reasons, but number one, lighter volume on those gaps back up. The energy down wasn't all that exciting, and even when we got into the throes yesterday, 3.8 million shares, doesn't tell me a lot of people are ready to jump out of the boat yet. Could have bounced to like 1180, 1190 or something. I think it certainly could, and not a big deal if it does. But, this is an earnings monster. It's kind of like shorting Microsoft or shorting Boeing. These guys have lots of orders, and for everybody that stands away, there's somebody else to get right in line. So I'm not really too worried about Google. Will it eventually pull back? The answer is yes, but I have a feeling that there are a lot weaker stocks out here to go after. AVAV is another one that he is talking about maybe shorting. Now, to me, you have probably, another one that I probably would not short. This thing had a sign of strength on the 5th of March. It's probably going to come back to there. So could you get a retreat to $34, maybe $33? The answer is yes. But the question is, will it fall down farther from there? And the answer is no. There's a lot of stocks out here that do have a trap door, and when they start falling, they're just never going to quit. Both these stocks look like Google looked like it's hit its level of support, and this AeroVironment looks like it would probably come back into $33 and stop, at least for a while, probably go sideways. I think there's a lot of stocks set up like this that don't have a sign of strength that you can avoid. And are you going to make some money on this one? Yeah. Is it going to fall potentially back to $18? Not so fast. And that is the problem. I would rather see you short a stock up at this level that could fall in half and maybe you only get a quarter of it than short one that is you're only going to get a quarter and maybe you only end up with an eighth on if market conditions don't move. So it is going to be problematic at the best. But look for stocks that don't have a lot of support levels down below. Anyway, we'll be back in a moment. Give me a call, 877-927-6648, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with NADEX. NADEX, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with NADEX in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. NADEX is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And I am back. A little bit under the weather here. Had a sneeze fest just before I came back. Glad I wasn't sneezing on Tom. I won't be in this afternoon to do the Tech Insider, so maybe we'll talk about a few of those things today while I'm sweating and trying to figure out whether I have a flu or a bad allergy. It's one of the other ones, or maybe both at the same time. When we look at Europe, they mostly closed higher. FTSE was up 0.4. Germany's DAX, which is probably the most important, 1.4%. France was up 0.7. So pretty much a universal pop out there in the Eurozone. And of course, when we look at China, where are my China news out here? I will find it in a minute. Nikkei was up 0.5%. Hong Kong was up 1.1%. And Shanghai Composite, which is also the weakest, up about 0.2. But it was higher earlier, slumped to the close. But China's still looking like going to pull back a bit more than anything else out here. I was going to talk about a few things that are probably the most interesting. Let's see if I can find them here. We've talked about Bitcoin. Lucky one. Probably the biggest thing that I would look at, we were talking about Google, was Amazon is dropping its Amazon Web Services prices by 30% the day before. Apparently somebody heard at Google and dropped their services, but still about 95% of all the earnings from Google comes from search. When we get to Amazon, of course, they have no earnings. They spend anything that looks like an earning, and you never know when they're going to make any money. I didn't look at them today, but maybe I should and give you a quick quote on Amazon. AMZN. We have a flat AMZN. This one's having a tougher time. Another one of these, though, that look awful lot like it's reached some level of support right around this 340 level. Yesterday, of course, we needed about 10 million shares. We got 5.7 million shares today, 2.8 million shares as we go back into this gap. That gap came up on 12 million shares on the October 25th. So, you know, we've come back into this level several times, and we've got at least two levels here that make me look like this thing could bounce back up. Could it get to 383 yet again? I don't know. I think we're probably looking at one more bounce up, maybe 360, 365. I'd love to see something like that on the news next week, and then maybe it'll have the energy that it's going to need to bust this 340 level. Once you get out of the 340 level, then you've got gaps at 310, 300, and 280 to shoot for, all the way down to 260. But I think, if I'm not mistaken, the one that I'm thinking this thing goes back to is about the 310. So a nice move back here lower, but it would be interesting. WWD. Oh, check to see if I've got any more mail. See what we have here. Okay. We did SGG. We did that. And we did George from Tennessee. Okay. And no messages in the 10. So you can give me a call, 877-927-6648, and we'll take a look at it. Whole Foods market, this thing got blown apart on earnings back on November 7th. It's been pretty much moving down for a while. I had another gap down on earnings February 13th, $50.32. 25 million shares. Now, this is where I'm starting to show a lot of these stocks having support. $50.10. So we went below it yesterday. Volume dramatically lightened up. And, of course, you've got a bounce here. So you're probably going to need some more consolidations for a lot of these stocks to find lower prices. But there's enough of them out here that are banging on lows that I think we get at least a bounce for a few days. GDX again. And I don't know what the question is. Looking at GDX, I think we're just getting a nice little bounce where people are buying gold going into the weekend, and gold miners. And, you know, you were basically on the GDX, you didn't want it to go below 2430. It did pierce it. Volume was great, and that tells me that you got even lower prices set up. On the 26th, we went through it with 60 million shares. And I think if we go back and look at this in the retracement levels, maybe get this up a little bit. This thing, yeah, if I remember right, it was like 24.48. Yeah, it was like 24.48. You didn't want the GDX or the GDXJ on that one. Let me see. GDXJ. Yeah. Both of these blew through what should have been the support levels on the way down for confluence. And while you're getting a little bounce up here, you're probably going to see resistance in the DDXJ at about $40, and the DDX itself. Yeah, you're probably right at it, maybe even a little higher. So I wouldn't be surprised to see us have maybe $25 on the GDX, and then to see this thing head back down to lower prices. Certainly looks like they're selling gold with every opportunity they can find. So I don't see a whole lot in here other than the fact that we are hanging out here with some decent prices. We're at, what, $12.93 on gold. But I have a feeling when this market starts moving down again next week, we're going to see gold move down with it. Other stocks of interest that look and make me think that we might have at least some level of support are a lot of these WageWorks, WAGE. Not a lot here, but several of these stocks doing it. Ultra Petroleum, UNL, Unipixel, probably one of the, I'm looking at stocks that could possibly have bottomed out here. Some of these have gotten weaker and even gone through high volume lows. This Unipixel, of course, had a huge run back up to $41 in April. That was mostly on shortages of the touchscreen membrane, if I remember right, that Apple needed for its smartphones. When the supply came back in Japan, Unipixel pretty much all the way back down to the lows. And it is going to be it. What can you say? But anyway, was hoping that maybe we'd find a few stocks out here given a symbol of a low. But even on the most generous of lows, January 7th, 1.4 million shares at $8.36. Last few days, 199,360,000, and today 211. So some of these stocks probably going to get ready to bounce just a little bit. UIL, again, a lot of these stocks back to these levels of support. Nice pop on the 9th of January for United Continental. That had 24.4 million shares. Got back into it on the 5th with 9.5 million shares. In the last few days, 3.5 million shares. Today, 1.6 million shares. Certainly not seeing a lot more pressure in this market to the downside for the moment. And that's why I'd be very careful. Mike in Duluth. How you doing, Mike?
Okay. I caught you talking about Amazon, but I didn't have a clear signal on the internet. Hope you can hear me okay, by the way.
Oh, yeah.
But I think that Amazon might have good news next week. But
I think they're going to get a bounce. They're going to introduce their new streaming service next week, from all rumors. It is going to be free with Amazon Prime, and I think they've got a library of 5,000 or 10,000 movies or something. But they're doing the same thing that Netflix is doing. They buy a lot of old reruns and not a lot of first-run movies that cost a lot. And, if you want to watch, like I do, the old reruns of X-Files or something like that, pretty good. And occasionally they get, seasons of TV shows I haven't seen, so you can binge watch those. But I think Amazon's going to kind of try to do the same thing. But I certainly wouldn't be short here with it testing the previous low, February 5th, with half the volume.
What was that previous low? February 5th.
February 5th was 337.73, 10 million shares. And that's the conservative view of this thing. I'm going to say that's the conservative. Last 2 days, 5.7 million shares. Yesterday, 2.9 so far today. The energy is not increasing down here. And again, I think this is going to be one of these companies that bounces, and maybe the next time or the next time down, we're going to see energy come in, but I don't think it's right now. But I think this thing could bounce to probably 360, 365 in that area. Maybe just on the news from next week, and just a little short squeeze that we haven't really seen so far.
Wow, that's a big bounce from right here.
I wouldn't think so. It's like a $34 stock going to 36. $2. Yeah. If you knew 100% chance that it was going to do that, that was great. But what if Putin runs in on Monday and invades Ukraine? And maybe it doesn't bounce there. So, I'd want a good, probably 75% chance that this thing was going to go back up to 383 to actually go long this thing. And I don't think you can put the odds up that high. I think you'd much rather see this thing go back up high, have no volume, and then short it than go long it here.
Oh, so you wouldn't go long it here, but you would play it for the short side is what you're saying.
If it gets back up there and the volume all falls out, then the energy is probably going to come in next time, and it's probably going to get that 10 million shares, and you're going to see it break it, and you're going to find those lower lows maybe back down to 310. To me, that would be the better trade of the two, either being long or short. There are a lot of stocks out here that are testing lows on lighter volume, but this thing came down on huge volume, and why it can go sideways for a little while, still problematic out here. Any company that's not making money has got a problem right now.
That's true.
Yeah.
They don't make money. That's pretty crazy, isn't it?
Yeah, and that's why I'd be worried about it. Anyway, anything else?
Okay. No, just wait for the bounce and see. I guess it's like you said, they have to come up with some information about the that special little I'll call it a chip that I saw advertised, and what you're talking about.
Yeah, it's a little dongle, HDMI dongle. But that's the rumor so far. But I think the thing's either Tuesday or Wednesday from Amazon and their developer meeting, and the idea is that they're going to roll it out then, and we'll take a look and see what they've got. But my guess is that it's going to probably hurt Netflix a lot more than it helps Amazon.
Very good. Thank you for your time.
You bet. Okay, and that was Mike in Duluth. You can call me also at 877-927-6648. Got a couple of emails out here. NUGT. If I can actually, I didn't get the T in there. NUGT. This is the Gold Miners Bull 3X share. This thing's pretty much come back down. Got a nice little bounce out of here today. Could it get back up to $40, maybe 41 or 42, and then head back down? I think it could. But, boy, you certainly don't like these huge volume days coming back down, especially the 26th with 7.3 million shares and 7.6 million shares on the 24th. A lot of people getting way out of the way. And what do we have for retracements out here? Let's take a quick look. Let's do this. Let's make this a little cleaner. Set that as the focus number, and that is, actually, that should have been, we'll make this the A then. Okay, so what do we have? Things already gone through 618, and of course you don't want that. This thing's made far too much of a retracement. So you're probably looking at this thing probably trying to make it back down to 24.14. Probably a little bounce. Could you get back up into this gap? Maybe at 40. Just what is that? 41.82. Yeah, something like that. Maybe $42. So we could see a little bounce out of here. Be a nice little trade, but weakness looks. Gold looks like it's broken. To me, anyway. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on NADEX in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade NADEX spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the NADEX exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the NADEX box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, markets trying to claw up a little bit. Looks like we've 7 points on the S&P cash, 2.1 billion shares. Volume starting to finally pick up a little bit. Remember, we've got fund buying for the next couple of days, so don't get too excited about any movement out here to the upside. But I'm expecting, well, we've had our first gap up here today. I suspect we could get a couple more. And I'd love to see one where we really get all the shorts squeezed out of the market, leaving a market that's got yet another chance to get a bite of the apple. Had an email from Ken in Wyoming asking about JO. This is the AIG Coffee Total Return Sub-Index. And I guess the question is in a BC leg, and the answer is yes. This thing is actually in a C to D leg, sort of, and one A, B, C. So I'm thinking, what are you thinking? It's going down? I like this play here, actually. If you could have bought it again at 33.44, would have been a nice setup. You basically have a 1-to-1 ABC at $49 now. So coffee looks incredibly bullish. And if you go back and look, this thing had set up perfectly for the confluence levels. And that confluence level came in at 33.72 to 32.36. And a little wider than I like for a lot of things, but still fairly narrow, but pretty much got into that confluence zone, and that's where you found support. Volume did come down a little bit higher than you like, so it's probably not going to be going up every day like it did in the rally from February 7th to March 12th. But I think you could get a test of the top at least at 41.98, and if you bought it in that confluence zone, you have pretty good risk reward. I think if you could have bought it at $33, what is it? 33.72. If you could have bought it at around those lows, wouldn't have been pretty nice. You just don't want it to go below 32.36 out here, which would be pretty much a failure, take you back down into the 28s and 27s. So coffee looking actually fairly decent out here, at least from this ETF, the volume patterns and the energy out of it. But I think you probably have a good chance for $42 again on this thing. With about a minute to go, did I have anything else I wanted to talk about in technology before the end of the day? And I don't know if there is anything out here. Probably the most interesting thing to me today, I don't know if you've heard about it, but Walmart is suing Visa. These things have looked kind of weak before, probably looking weaker today. Let's take a look at these. And like a lot of these stocks, lighter volume today than before, or the last time down here. You had 5.4 million shares. You've got 2.3 million shares on Visa today. So even some of these stocks having fairly bad news, kind of starting to hang out at levels of support that we've seen before. That means we could get 2, 3, 4 days of a bounce and maybe a nice short squeeze to get everybody out, and then that would be probably the opportunity to dive back in. Will I put any trades on before the end of the day? Nope. I wouldn't put anything on. I'd be saying I want to wait for this thing to bounce, and then I'll take the short side if we do get that light volume move. And that'll probably be next week. I'm more than interested to sit on the sidelines and let this thing develop out instead of try to anticipate the market. I'm going to wait for it to do what I think it's going to do. Anyway, we'll see you Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.